Hello, everyone. Red, are you here? Can you hear me?
Yep, I'm here.
Awesome. Today we are at the Decentralized episode 7, the DeFi Expert Talks hosted by Fringe Finance. The podcast is available on Spotify, Google, Amazon Podcasts, YouTube, and many more. My name is Konstantin Shirokov, and I'm the marketing director of Fringe Finance. And today we have a great guest. Meet Red, the community foreman at Harvest Finance. Red, could you please introduce yourself?
Sure. Thanks for having me. So I'm Red at Harvest Finance. Title is a foreman, essentially kind of like a project manager within the community workers of Harvest. Harvest is a 100% community managed protocol. It was originally launched by some anonymous developers, but over like the 4 years, 3.5 years time that Harvest has existed, it slowly kind of transitioned over to this community fully owned, managed protocol, essentially kind of like what you think a DAO should be, right? Like a bunch of people decentralized all over, the planet, working towards like the common good of a singular protocol, and that's what we're attempting to do to Harvest Finance.
Awesome, thanks. And what is your history and what is your story of joining Harvest?
So I've kind of been messing around in this space since like 2017. I heard about like Ethereum from my brother-in-law, who was kind of really into cryptocurrencies. I had always thought, like, I'd only heard Bitcoin up to that point, and I always kind of thought it was kind of dumb internet money. Didn't really seem to have like much value or backing behind it. But then when they explained Ethereum to me, and just understanding like smart contracts and how you could have these decentralized applications, that's what really got me interested. And like I love to gamble, like sports gamble, go to a casino, play some roulette and stuff like that. So I actually thought like the first thing in my head was like, oh, somebody needs to start like a decentralized casino, because now that you have this global currency and Ethereum, you could have these, a casino is ultimately math, so you could easily write that into like smart contracts. So why doesn't somebody create like this globalized casino that can turn out billions of dollars and then ultimately share that with like its token holders? And since then, obviously, I've just been working in the space. I've been doing a lot of community work for various projects. And then when Harvest kind of started up, I just stumbled into their Discord because I wanted to find an easy way to yield farm, because this was back in DeFi summer. There was, yield farms popping up all over the place, but a lot of them were rugs, or just like plain scam coins. So like Harvest to me, I thought was like a safe way that you could farm. They did the automated compounding for you from APR to APY. So I was in there within like the first couple of days of the project launching. And I was just helping other people with questions that I was asking for the answer to. And then ultimately I became a mod with the project, just helping out in the community. I would write articles. Um, and eventually over time, like I said, now it's been like 3.5 years, kind of just over time, I've kind of been like, just like more of one of the senior community contributors. And like I said, I try to help project manage all the different facets that are kind of going on with Harvest Finance. So like you have business developers who are trying to do collaborations. You have people that are writing code. You have people that are just doing all these other various things that need to occur within a business that kind of supports a protocol. So I'm just there trying to help make sure communication is flowing within the project, and everybody's getting the attention that they need to succeed within their own individual tasks.
Yeah, thanks for that response. I love that how it happens in Web3 space, the direction from the community member to a team member. I don't think that's so common in Web2 space.
Yeah, I mean it's funny because I just gave a talk about this actually ECC in Paris 2 weeks ago. Um, as you say, a lot of not a people or not a lot of projects necessarily take direction from their community, right? But like, yet we're supposed to be like these DAOs that are essentially these protocols are supposed to be run by community, but they're not. Like, it's kind of like hidden behind this guise of like, oh, you can vote, we're a DAO, but ultimately that only affects the protocol level, right? But if like JP Morgan or some big bank came and launched their bank on the blockchain and said, "Oh, here's some tokens, you can do some voting with it, but we're still going to control, you know, other 95% of the business that's behind the protocol," like, would you call that decentralized? And he would say, and like most people would obviously say no, right? Like that's not the vision that we have as decentralization. But that's like what 99% of all projects are, right? They try to trick you and say, "Oh, we're decentralized because we have a token and you can do some voting," but they're actually controlling the strings, behind the scenes, right? And most people would understand that governance via token voting is very rigged too, because you can have some whales that basically just tip the scale whichever way they want it to go. So, like Harvest, we tried to radically change that, where it's like, what is truly a DAO when the community is like really involved and participating and actually performing the work themselves, right? Like a commune style contribution, right? And like just thinking about like the metaphors we use at Harvest farming, just think of a giant collective commune, all farming, all working in the dirt, all trying to grow the crops to be a successful farm. And that's like ultimately what we're trying to do at Harvest Finance. Everybody's contributing in their core strength, whether you're a coder, whether you're a guy good with the business development, whether you're good at risk management, whatever it is. Like, we need all these different skill sets like a normal business does. And we don't want to be quote unquote centralized, because that defeats the whole purpose of like being on blockchain. So how do you accomplish that, right? And like, I think that's, as you say, like Harvest is very uncommon in that is not that we're not just trying to decentralize like this, the approach to just the protocol level. We're trying to decentralize the business level as well.
Sometimes it's complicated to manage, even a small team and manage it in a centralized way. How do you handle managing, actually community driven project?
So,
Any tricks?
so, it comes down to like, you break it down into like these smaller core groups, and those groups kind of like operate independently of each other, right? So like you have like you group of business developers, and that those are the people going out and looking for the collaborations. What different strategies can we launch at Harvest Finance that our customers want, right? And so they're operating independently, and nobody's necessarily giving them directive, other than they're maybe receiving feedback from like the group that oversees like the community itself and socials, and they have kind of like a pulse on, well, what strategies do the community want? Do they want like these LSD strategies? Do they want like vanilla, easy yield farming, low risk? Do they want folding strategies? So then there's some communication between these two groups, but those groups are still operating independently, and they're kind of like smaller groups. So as you say, like, it's not just this like huge business that's trying to be controlled by one like CEO, right? Like, we're trying to be decentralized in the sense like, okay, you guys know like what our core values and objective here at Harvest are. So when you're doing your business development, try to follow those guidelines and understand those are the things that we want to do at Harvest. Don't go out making partnerships with like shit coins that are going to like rug in 3 days and everybody's going to lose their money, right? Like, that's not like the principles we hold to at Harvest. But outside of those loose guidelines, like, they're self-managed, right? And then we have, whether it's like bi-weekly meetings or, we're having like individual DM groups where we're just kind of talking through stuff during like those 2 weeks. That's kind of how we manage it, right? So it's not like this big giant entity, right? Like, again, it's very decentralized, and we have these pockets of people doing what their core strengths are.
We're not speaking here only about business development, but also about programming as well. And sometimes, change in one line of code affects other. How the potential conflicts in between different, groups and their deployment of the code. How do you handle that?
So yeah, there's like I said, there's kind of like a senior like project managers or leaders like myself, right? Like, again, we're not like, we don't want to call ourselves like in charge. Like, a manager is like a very loose term, but there's people that, as you say, like, vet the code. There may be other people that are writing strategies, but then it goes through a vetting process and saying like, oh, maybe this isn't doing what you think it's supposed to. Like, we have a test environment. So there's a lot of like, internal communication, as opposed to like, let's vote to see this piece of code is going to go live. Well, that voting still doesn't ensure whether that code is right or wrong, right? So we feel like internally, we get directive from the community. We may have community builders that are helping us write and implement, write code, and then it is our like kind of like senior core group that makes sure like security things, that code, is basically up to standard.
Yeah, very interesting experience, and I think that's something that will be more widely used in the space, and there will be a switch and transition from this centralized business operations to more community driven process. But coming back to our initial topic, you have mentioned that the transition from APR to APY. Could you please describe that more in details for people unfamiliar with that?
Sure. So like APR is if you took $1,000 and you deposited, wherever at a bank or whether you're doing it in DeFi, and you're earning rewards on that $1,000, right? But those rewards that you're earning aren't necessarily adding to your $1,000 balance. They're accruing in a separate pile. What Harvest does, it actually takes those rewards that you're accruing in a separate pile, and through automation, maybe every day, maybe every few hours, just depending on how quickly those rewards are accruing, the automated system sells those rewards back into what you initially deposited. So if you deposited $1,000 in ETH, it goes and sells the rewards. You earn, $200. It redeposits that ETH into your account, and now you're earning with $1,200 instead of just earning with $1,000. And so every time it's selling those rewards, it's redepositing back to your account, and now you're earning with $1,700. Now you're earning with $2,000, and because now you're earning with more money, you're earning rewards even quicker. Every time it compounds, you're earning money faster. So you're earning money actually exponentially in an APY curve than you are compared to an APR curve. And so that's like kind of basically the essential principle of Harvest, the automation doing those steps for you. Because if you're farming on Ethereum, gas costs may be high. And so if you're only farming, $200 worth of rewards, but it costs you $50 in gas, well, that just took a large bite out of your profitability. But by Harvest doing that, not only does it, automate the steps for you, we're actually eating the gas cost because we're able to do that farming across multiple depositors, right? So instead of just you paying that $50 cost, well, now maybe you're in the same strategy with 100 other people. Well, now that $50 cost is essentially spread across 100 different users, right? So much cheaper in a sense for you to use Harvest Protocol and farm with us. And then also, too, depending on the jurisdiction you live in, it can actually help you save on taxes. So, like if you were an American using a yield farming aggregator, not necessarily Harvest, but like the benefits of using a protocol like that is anytime you claim rewards yourself as an individual user, that's a taxable event. So if you were farming by yourself manually, every time you went and claimed those rewards, you get taxed on that. And then when you wanted to swap back into ETH, you get taxed onto that because now you're swapping between two different currencies, and that's you're supposedly supposed to pay taxes on that, right? Because Harvest contracts are doing all of that steps for you, you're actually not liable for the tax on those individual events. And I'm not a tax person, so I would talk to your CPA or whoever, but it's our understanding that this also helps in many people's taxable jurisdictions that we actually eliminate all those steps for you as taxable events. And now you have automation through the system that's doing it for you. So in the end, it's you put in 1,000, you withdrawn, got $1,800 back. Your taxable event would only be that $800 gain, as opposed to 10 different taxable events you would have to go through if you did that yourself.
I have thought about that angle of tax optimization. Are there any are there any type of pools with which Havest could not work, could not optimize yield aggregation for them?
Um, you know what? It's a little bit of the challenge, just because it every strategy um, kind of has its individual challenges, right? So, um, some things, like, the hottest new meme coin that comes out, right? Like, sometimes you see these 10,000% yield farms, and everybody kind of like, oh, that's amazing. Let me go and grab throw my money in there because that percentage seems high. But when you actually extrapolate that out to like per day's earning, it's only like 0.5%, right? And so you're trying to chase this 10,000% meme coin that then suddenly rugs overnight. Not only did you not get this huge earning percentage you thought, now the token that you were trying to earn is just worth nothing, right? And so those are the things that we want to be very like aware of when we deploy a strategy that customers are going to deposit into, that they're not farming necessarily like pure junk, right? Like, we don't try to make any judgment calls on what the product is, but we will, in a sense, want to make sure that when our farmers deposit and when then they exit again over a period of time, they've actually earned something, right? We've actually provided a service to them. And in a sense, it's kind of difficult because you see things like, oh, bald coin, and everybody wants to jump on the next like 100,000x, but then overnight that thing goes to zero, and everybody's mad. And who they want to point to? Well, if you're the protocol that they use to farm with, they're going to be mad at you, right? And so we need to take that into account on any type of strategy that we roll out. Even those kind of social risks.
Do you have any definite thresholds for the new strategies that you integrate? Like, for example, this amount of API and the uh, the duration of the pool, etc. Maybe audits. What are the thresholds for you to integrate, and what is the research process?
Yeah, I mean, it's a great question. I'm not a dev specifically. I know kind of like the framework for what we go through, and one of our devs could probably speak to it a little bit more thoroughly. But yeah, we want to check. Um, Sometimes it's hard to say, oh, have they been third party audited? Because a lot of times these like fresh yields that are coming out, they haven't had time to have like an audit completed. So we have to kind of do a soft audit of the contracts. And a lot of time they're using like a modified version of Sushi Swap or Master Chef contracts. Um, and that was very common. And you can compare, there's tools that help you compare the code that you're looking at to like the original code that was deployed from. Helps you see like any differences, make sure that there's no flaws in the strategy. And then yeah, we're looking for durations of the reward program. We don't want to deploy something that's only going to be available for like 3 days, right? We want to make sure that that there's good viable rewards on it. And a lot of times too, we interact directly with the project and say, hey, we're coming to you. We think we'll help bring you more liquidity, marketing or whatever it is. Can you provide some extra incentives? Is there something that we can do to work with you? So like even working with, projects like Camelot on Arbitrum and expanding pools there, working with up and coming things in the ecosystem like DeSci, decentralized science, is like a huge thing that's coming up in the space. Something that's very like backed by Vitalik, and just ensuring that there's legitimacy and transparency in the way science is conducted within our planet, right? Like so many people question science nowadays, and so there's these projects springing up like that. And Genomes is one of the ones that's been with Harvest for a long time. And they actually provide extra incentives to the pools that their users can enjoy by going through Harvest, as opposed to like directly farming the pools themselves. So those are some of the things that like we want to consider, when we're rolling out. But security is like the most utmost importance, and just making sure that those contracts are viable and nothing's ever going to happen to a user's deposit.
Sounds awesome. We at Fringe we have pretty lucrative APY for stablecoin pool currently, and with an introduction of the second version of the platform, we are switching to multi-lending asset. So any asset that is currently used as the collateral, it will be available as a lending asset as well. And we're introducing Amplify platform where you could basically amplify the position in any asset that is used as a collateral in a way that is available on MakerDAO currently, but not only for top asset, but for any asset. So I will not hide that we would be interested in integrating and having yield aggregation for these pools on Harvest potentially. So yeah, so I would be interested to know what are the thresholds for that. Thank you for clarifying that.
Yeah, of course, and that's something like too we can always talk specifically through our business developers, right? Um, so yeah, I definitely would be interested in that. I saw you guys are talking about launching on ZK Sync as well. I personally love
Right.
messing around on ZK Sync and farming and trying new protocols that are launching there. And Harvest is actually thinking about um, launching on ZK Sync. We just need more quality projects to work with and interact with before we can actually launch there.
Yeah, we have seen some hacks recently with products on ZK-Sync. So we need to stress on having the security, and generally not only on ZK-Sync, but the whole space is being filled with hacks and rug pulls. So even in comparison with TradFi, I'm not sure currently that our space looks attractive currently. What is your opinion generally about that, and what do you think will be a way forward for the industry? Will it overcome that process of constant hacks, or it will stay the same and we will just always fight with with hacks and with rug pulls?
Yeah, I mean, it's hard to say because one, I think the current state of like the industry is pretty poor right now because the biggest thing out there is meme coins and people chasing their money that way, as opposed to like wanting to put their money behind projects that are legitimate. And I've said it like a few times recently that the majority of people in this space, they don't care about good projects. They just care about where's the next 100x, right? And so I think that's why you're also seeing a lot of hacks because it's happening to a lot of newer projects that are coming out and deploying and just trying to push something quickly, um, so they can be that next 100x, so they can be the next big token that's being talked about. And so, like, especially like on ZK Sync, I personally use it a lot and, just trying to farm and mess around with different projects. I unfortunately wasn't affected in the Eralend hack. I didn't lose like a whole bunch of money, but, I did lose some. And I think I was also, I think in Merlin, which was a deployment there, and they ended up being like a rug pull. Again, didn't lose like a whole bunch of money there, but I think the most hacks I've been in or rug pulls have been on ZK Sync. And I've been in the space since like, 2017, and I've only been using, ZK Sync the past 3-4 months. So I think, and again, the common thing along all of those are, new immature projects springing up, kind of people just jumping into these, hoping that they can get some tokens for free and airdrop for free, or just trying to farm, and then they get hacked, right? But then you also have like Curve, who's pretty well known and established. But because there was an update to the programming language, I think it was, and kind of affected all of their pools that were deployed, or a large, a portion of their pools that were deployed, and then that had effects downstream, ripple effects downstream on other projects who were kind of bolted in with Curve. So it's a hard answer to say, right? Because again, as I was pointing out, you have some immature protocols generally leading the way with these issues, and then you have now a big name protocol like Curve that was having an issue. So again, when it comes down to if you have a little deviation in a single line of code can end up being you're hacked, well then either we need much stronger like auditing services and rigor around code that's being deployed, or you're really just inviting in more regulatory oversight and essentially tracking of activities on blockchain, because otherwise how are you going to stop like hackers from continuously stealing money, right? Like $50 million was at stake, I think, at the recent Curve one, and that's relatively small to some of the larger hacks that have happened within the space. So I don't know, I've kind of said a lot there without giving you a clear yes or no there, because I think it's just such an impossible thing to figure out, right? And I think this space is so cutting edge, and people are trying so many different unique things to get attention. They're going to make mistakes in the code, and we're going to be the ones that are paying for it.
It sounds so crazy that there was a hack for 50 million and it's not considered, very big in comparison with other
I
ones.
know.
That has happened.
Yeah, it's crazy. It's like, oh, it's crypto another day, just $50 million.
I have a question regarding your business model. Have you seen the introduction of examples of auto compounding by the protocols themselves? And if you have, do you see this as a threat to your model that protocols will introduce that themselves, and yield aggregators will become redundant?
So yes, a little bit. So like I think a lot of things have changed since like DeFi summer, where it was like, hey, there's yield farms popping everywhere. Let us do the farming for you. We'll automate the process, or whatever. And now a lot of projects are, yeah, we'll do auto compounding for you, like SyncSwap. They auto compound their LP positions with the fees, right? So that's not something that we could technically farm. So, one of the things that we've been talking about internally is, what can we do to offer things that go beyond just like your typical vanilla farming, right? Deposit money, earn rewards. And things coming out like with Staked ETH and LSD, and other protocols like lending protocols, allowing to borrow against LP positions. There's a lot of opportunities for things, for doing like folding type strategies, right? And so that goes beyond, just your deposit and, auto compounding, right? You're kind of doing this money Lego, again, folding leverage, involving multiple protocols. And that's something, not all users are comfortable doing themselves. So they would want, another protocol to help them do that. And then two, maybe they don't know how to do it, right? And so again, just being able to provide that service and go above and beyond this kind of vanilla type approach, and what else can we do to take it farther and stay on that cutting edge to still yield farm, and utilize the depositors' money safely, while trying to earn them, the best possible APY percentages.
Yeah, thanks for that. Very comprehensive. Uh, I've seen that there was an update quite recently on Harvest side. So there was an introduction on Harvest v3. Could you please tell more about what was introduced there and how it was met by the community?
Yeah, Harvest V3 is very cool, in that it was a community driven, overhaul of the protocol. So, essentially the protocol prior to this had seen two updates, but they are very generic. Visually, the site was just very basic, very cluttered. And so with V3, along with this idea of like, we're stepping out of this era of just plain vanilla farming, we need to represent ourselves as not just kind of like this just degenerate website where you're trying to chase 10,000% APYs. We've basically, in a sense, become legitimate in the sense that like your money is like as safe as like something is you're doing with like traditional finance, right? We're finding you real yields, sustainable yields. You can deposit and forget about it, and your money will be, relatively safe in those smart contracts performing this automated compounding for you, right? So along that comes with that is just kind of like this overhaul in the visualization of that as well, right? So brand new website, UX, things are a lot more clean cut, professional looking. And then I think one of the best things that we've done is basically introduce Zaps, the loose term for basically you being able to take any currency. So if you have USDC, but you want to jump into this curve LP that's producing at 25% or whatever, normally you would have to take your USDC, deposit it over at Curve, get your LP token, then bring that over to the yield aggregator that you want to use and deposit that LP token, right? So that it requires you interacting with another website you've never seen or heard of or used before. But through Zaps via Wedo, you can basically just say, oh, here's my USDC, click deposit, and the smart contracts behind the scenes will convert that USDC to the Curve LP for you and the deposit and get you earning right away through Harvest, right? So, trying to offer this in a sense like a one-click solution for a user so they never have to leave the Harvest website. They never have to go searching for some weird token they've never heard of. They can just click and deposit with anything in their wallet and it all automatically converts for them. So again, just trying to make a very clean, streamlined user experience that anybody can use. So your Aunt Matilda who knows nothing should be able to come to Harvest Finance if they understand having cryptocurrency in their wallet, connect to our website, and within a few clicks, they can deposit, earn within any strategy very quickly. And so I think that's like the biggest real innovation of V3 is trying to make crypto accessible for anybody, because that's really the biggest problem right now. Like UX is, typically pretty poor. You have these big, weird, long string of numbers, even though ENS is trying to help that, but your wallet address is crazy. You mistype your wallet address, you can send your money into oblivion. So again, just trying to keep that in mind. What can we do or what could we do to make that user experience much more simple so they can comfortably feel like, okay, I put my money here and I'm going to be earning this X percent of what it's telling me. And that process is very simple. And again, not having to jump around to different websites. So I think that's really the biggest thing introduced with Harvest V3, along with the fact that we're just continuously trying to roll out the freshest strategies that users want. The biggest focus right now is, liquid staked ETH, LSD type strategies. And so we offer, I think across three different strategies or three different protocols, have like three different strategies with each of them. So I think we're offering like up to 10 different LSD type yield farming strategies for people who want to stake their ETH for, the ETH 2.0 or whatever and earn a good percentage on that, but then still be able to have value in that derivative that's created from staking and say, okay, now I can put it over here and kind of boost that earning power by, farming with Harvest Finance.
I love how we're building like profit level on the profit level on the profit level for generating yields for the asset. So you initially stake your Ethereum and receive rewards for that. Then you participate with your staked Ethereum in some pool, and then on top of that, you automatically generate yields.
Yep. And then you can actually futurize that. Like if you ever heard of a protocol called Spectra Finance, it's kind of like a Pendle Finance, which is kind of popular right now. But you can take your liquid staked ETH, deposit that at Spectra Finance, and then you can basically take up to a year advance on that yield by taking just a discount and selling it at a discount. So if you're, if the projected value is 20%, maybe you sell it at 17%, but you get your money up front now, right? And then you could go redeposit that money you got up front now back into more stake ETH and fold that even further and further.
That's crazy.
Yep.
That's crazy. I have one more question regarding your multi-chain strategy. We have briefly touched that on the new chains the risks are multiplied, and I believe you're quite vigilant with an introduction of the new chains. But what do you think about? Well, recently, we have seen with the launch of new L1s on Ethereum with Arbitrum and Optimism, and their rewards distribution. It was one of the biggest, yield generating opportunities in the space. Do you expect the same with the new chains?
Yeah, it's hard because you have so many chains. I think it's diluting, the quality of projects, right? Like I'm still waiting to see like an Aave launch on ZK Sync or, one of these big names to launch over there because ultimately, um, if they're just not good quality things launching on a chain, like we can't farm there, right? Like there's no point for us deploying there. And we actually saw that issue with the BSC chain. More often than not, the things that we were trying to deploy there turned into projects that just like quickly collapsed. So while as like a protocol harvest, like we never know, like if we can look at code and the code saying, yeah, the code's perfectly fine, the reward program is great, let's start farming it. We can't make a judgment call on the people who are launching it because sometimes you don't even know who's launching it, right? And even then, like those people may, seem perfectly fine based on whatever their website says or whatever it is, right? But unfortunately, like with that chain specifically, there just wasn't a lot of opportunity there after a while, and we had to pull back our operations on that chain, right? And so, we were then only focusing like on Polygon, Ethereum, and Ethereum at that time. But now we've expanded to Arbitrum. We're actually considering expanding to Base Chain once more projects become available there. And as I mentioned, ZK Sync as well. But ultimately, we need good protocols there offering things, to users ultimately, so then we can offer our service to users, right? But if there's not good projects, if there's not good yield farms, there's not much really we can do on chains like ZK Sync until they beef up, the type of applications that they have there.
Yeah, with the launch of V2, we are expanding from Ethereum only to Polygon, Optimism, Arbitrum, and ZK-Sync. And we have received a lot of feedback, like add the support for this chain and that chain. But actually, there is a lack of infrastructure that is needed in order to get deployed on the chains, because on our side, we rely on the graph and we rely on the price oracles, and it even made us it was one of the reasons why we have decided to create our own price oracle model, because there was no chain link on ZK Sync available at the moment. But we have to be really careful with that once, and put the security and the funds of the users on the first place.
Yeah, I think that's actually what caused the issue with EraLend, I believe, is because there's a lack of Oracle service on ZK Sync. So then they were relying on Sync Swap pricing, but then however that pricing was read was screwed up at EraLend, and then it caused their hack. And so yeah, like if you can have all these different chains, but again, if you're not getting credible Oracle and pricing services, and you're trying to run a DEX, like how can you do that securely and safely? And then how can a protocol like Harvest then come and farm you if your pricing isn't, secure, right? So that's definitely something that we have to consider. And any chain we deploy to, is there credible infrastructure, as you say. You unmute there, boss?
Yeah, sorry for that. I said that one of the things that were introduced with the launch of V3 on Harvest were managed Uniswap V3 wallets. Could you tell more? How do they work?
Um, the managed positions aren't out yet, specifically for Uniswap. I don't think. That was one of the things that we were planning on implementing. We do have Uniswap positions out there, but I think they're just open as a wide range. But there was a plan at one point um, that we were going to offer these, but at the same time, there didn't seem to be a lot of customer demand for them. But basically, it was going to be like ETH/USD type strategies where it's basically just following the price very closely, setting tight ranges within the parameters of the pool, and then as soon as you were kind of crossing those thresholds, the money would be backed out, and then a new pool would be essentially spun up with a new range, right? And always just essentially trying to keep the depositor within a profitable trading range within fees. Because like right now, when the market's crab walking and it's staying within like this $100 range, well, there's still millions and millions of dollars of this being arbitrage trades or whatever, right? Like there's still a bunch of trading going on within this sideways market. And that's where, you can potentially be making a lot of money in these Uniswap pools because you're not suffering any impermanent loss and you're collecting a lot of trading fees, right? And so that's kind of one of the opportunities that Harvest saw there. Um, but again, it goes back to what I was saying earlier. Like right now, with the space being so depressed, um, a lot of your money is ultimately just trying to chase the next 10x. They don't necessarily care like, oh, Aave's like a really good product. Let me just park my money there or hold some Aave token because in the next 10 years they're going to be the biggest thing in crypto or whatever, right? Like nobody has that long term attention span here. It's always let me just jump to the next thing, to the next thing, to the next thing. And so again, like protocols like Harvest, and even if it rolls out like the most awesome strategy possible and managed Uniswap V3 pools, like that's not necessarily what the customer wants, right? Like the customer just wants like this really weird exotic, give me the 10,000% thing or I'm going to move on, right? So um, again, we've been really wanting to roll out that specific product, but I don't think we actually have to this point because I don't think the customer actually wants it.
Got it. And actually, there are already protocols that are doing similar, like Revert Finance, I believe, have such a feature.
Yeah, I mean, some other groups are doing it, but like, how much liquidity do they have that's actually like, operating within that protocol and wanting to do it, right? So,
Right, right. I wanted to ask a question about farm token. What is the utility for it and how it's used on Harvest and in the broader space? What utility does it have?
yeah, so Harvest, the farm token is basically um, allows you to stake it within the protocol, and then you can collect earnings that the protocol makes from yield farming. So, like, the protocol doesn't charge any deposit or withdrawal fees. So, if you deposit $1,000 and then you withdraw that $1,000, we don't charge you any fees on that. But if your $1,000 earns $100, right, profit, there's like depending on what chain it is, there's like anywhere from like an 8 to 15% fee charged on that every hundred on that $100, right? And so that fee, a piece of it goes to the Harvest Treasury so we can pay for gas and upkeep for the protocol. And then the other chunk, the majority of it, goes to those stakers who are staking the farm token, right? So you're essentially sharing in the profit that's generated by the Harvest protocol by being a holder and staker of the farm token. And so from that, it's almost like liquid staked ETH because if farm is basically a profit or like a revenue sharing token, it has value, right? It has an intrinsic value, right? If Harvest is making $100 million a year, divided that over however many tokens, right? These are just random numbers, right? You divide that however many number of farm tokens there are. Well, that tells you then farm is receiving X amount over the year. So in a sense, it's worth this much, right? And so just like with liquid stake ETH, you could take it over to a protocol like Spectra Finance, and leverage that future value, that theoretical value that the farm token has based on like prior performance of the Harvest protocol. And so you could leverage that. You could borrow against that. Like we were usable at Cream Finance at one point, but they were a terrible protocol. There was Ruler Finance. What was the other one? We were using Silo Finance recently, but there just wasn't much use by the customer on that one because they were just such a new protocol. But it gives you an idea. Like an Aave Finance would just be like another great example. Again, just being able to borrow and lend against your farm because again, it has intrinsic value behind it, where most other protocol tokens don't. Right? They're like, oh, this is just a governance token, and so you have random speculation on the price of that. But that could be theoretically zero because all it is the voting token. There's nothing really supporting the value of that. Whereas, at least with the Harvest token, again, not guaranteed any type of returns or value on it, but as long as the Harvest protocol is farming and churning out profits for its depositor, a small piece of that profit is flowing back to stakers and owners of the farm token.
Right. So currently, is it used as a collateral asset on any other platforms? You've mentioned Aave. Is there currently farm token available there?
No, not on Aave. We were applying, and then they kind of changed their whole dynamic on how you get listed there. Like Spectra Finance, we've been listed there for a long time. So essentially, yeah, you can futurize your yield there, buy and sell trade on the theoretical value of its performance there. I mentioned Silo Finance. We might reconnect with them, but ultimately requires a Chainlink Oracle. And it's extremely expensive on Ethereum. And so just to do it for that one protocol wasn't cost effective for us. But it's possible, like on Arbitrum, where we're really trying to expand our footprint, we'll see if there's a lending protocol based on like the liquidity we're providing across like multiple pools on Camelot, for instance. If we could do some kind of leverage or borrowing or lending across a protocol that starts up there.
Awesome. I believe with an introduction of our own Oracle model, we will be able to integrate farm token to be used both as a collateral and to be used in margin trading. So yeah, let's keep in touch on that.
Yeah, for sure.
I'm coming to the end of my question list. Could you share the future plans for Harvest and any final words?
Sure. Specifically for Harvest, really it's just trying to continue our expansion, try to understand what yield farmers want, right? Like, as I said before, often always chasing, the big, large percentages. But at some point, a lot of those things are going to disappear if this space is going to mature and actually go somewhere, right? And so we want to be that place that people remember, like, oh yeah, these guys always had great yields. They've always been on the cutting edge, and they've always been safe. Let's go back to Harvest. Let's deposit with them. and earn a legitimate return, on whatever we deposit, right? And so continuing just to kind of improve that, like I said, expanding to base, possibly ZK Sync, working with projects on Arbitrum. We were working with Camelot, and like they initially had like a huge grant proposal for the Arbitrum ecosystem. But like now that new framework came out for Arbitrum grants, so that's kind of like being refiddled with. But like ultimately, yeah, like we want to continue to work and collaborate, with the innovators and people that are really trying to bring something good to the space. I think what was this? The second part of the question?
No, not a question, just maybe some final words that you want
Oh yeah,
to add,
yeah.
or maybe I haven't asked any question that you want to highlight.
Yeah, sure. I guess the other thing I would just kind of touch on briefly, the same thing I talked about, and I mentioned a little bit earlier, but the same thing I talked about at ECC Paris, and just talking about like making sure that like projects that you engage with, understanding like their true level of decentralization, right? And like you kind of said it, Harvest is a little unique in how decentralized we are at the business level, but like we shouldn't be unique, right? Like ultimately, that's what the ideology of this whole blockchain space is, like decentralization. And again, you don't want to be just in a protocol just because they have a voting token and telling you, oh, you have these rights where you get to vote and help us make decisions. But again, it's only at like a code level. And again, that's generally very much controlled by whales. So, how much impact are you really having at that protocol if those are the only, quote unquote, rights that they're giving you? We really should be pushing and advocating for projects, like Harvest that are really trying to decentralize the entire business itself, and involving, community members to on making these decisions, from end to end, from the protocol through all business operations. And that's truly what will like make the space decentralized. Otherwise, we're just going to continue to, follow these projects that continue to stab us in the back, right? Whether it's like a huge corporation like FTX, which was like very centralized and everybody put their trust in like this, degen guy, down to projects that have been rug pulling us on the blockchain simply because, oh, hey, look, you had some governance rights. Everything seems fine, but then they end up screwing you, anyways, right? So again, I just, ultimately always like to tell people like be very mindful of like these projects and quote unquote DAOs that you're getting, involved with, and really ask, are they decentralized, or is it just, the same five guys running every decision other than some random vote that they put out there for you, which ultimately means, very little other than some changes to code, right? So that would just be my closing thoughts, like ultimately to where what we need to do to get this space to the next level, get us out of like this shit coin, meme coin chasing that we're going through right now, and really getting people interested in the good products that are launching within blockchain. And then what are those products doing to, truly decentralize themselves?
What a great and exciting words. I think that's a human nature and basic psychology that people will always love to gamble and always pursue these opportunities. So it has not started with Web3 and with the DeFi space, and it will not end there. But yeah, as the products, we should really aim to decentralize not only like the decision making on the token side, but also running business that is driven really by the community. Thank you, Red, for attending.
Yeah, thanks for having me. I really appreciate it. Look forward, and let's keep chatting to see what our projects can do together.
Awesome. Thank you so much. Have a great day.
Thank you. You too. Bye bye.